Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. The VRIC is in the books for this year. Keep an eye on the channel. We will be uploading all of the panels and keynote speeches as well. But of course, we are bringing the VRIC to you with our series of online panels. We have one today, which I'm very excited about. We've got Dave Collum, professor of organic chemistry at Cornell, and Tom Luongo, author of the Gold, Goats, and Guns newsletter. Gentlemen, it's a delight to have you both together for this show.
Thank
Yeah,
you.
we got to quit meeting like this, Tom.
Our wives might get jealous.
Yeah. My wife actually
we can't
was
do the typical Tommy Harrigan thing. I don't think Jesse would appreciate that one.
I was actually on pods on Sunday for 5.5 hours, and my wife let me have it.
Wow.
Wow. Well, we're not going to go 5.5 hours today.
What's really funny is that my business wife, my partner, Dexter, he gets my case if I do too many of these because he's like, you're not spending enough time actually watering. You know what I mean? Like, he's like, dude, take some time off. Like, don't work so hard. Like,
I was on a Zoom call with a caseworker, a CIA caseworker, and I just could not let that go. There were too many questions to be asked.
Sure.
Wow, I could imagine. Well, let me take control of this interview once again. And I want to start things off by asking quite a broad question. Feel free to answer it however you'd like. And that is, what are the main trends you're currently watching in financial markets, politics, and geopolitics in 2024? Mr. Tom Luongo, I'll start with you.
Oh, wow. So we only have 45, 50 minutes. All right. I'll keep it brief. What I'm really watching is the way things are unfolding. Clearly the way things are unfolding in the Gulf of Aden / the Red Sea. And then now the abortive ideas that we're going to bring Zelensky to the table and actually talk about peace, which he's not, and how that affects downstream, how that affects oil prices and then inflation and then the Fed's decisions and everything else. That's what I'm all of that is kind of there, right? And I think in my 10 predictions for this year, the one thing that I wanted to get through everybody's head is that I believe that there's a big, and since this is Davos week, that there's a big globalist temper tantrum that's on the horizon, or is actually happening as we speak across multiple venues, be it geopolitics or financial markets or domestic politics or whatever. And I think that temper tantrum and the fallout from it is the thing that we have to really watch out for everywhere. I think it just shows up in almost all the headlines that we see on a daily basis.
And Dave, turning to you now, what are you watching currently in the markets, politics, and geopolitics?
Yeah, that's a good way of putting it, actually, a temper tantrum. The Davos guys really look like assholes this year. I mean, they really are looking bad. The things they're saying are so authoritarian. Jamie Dimon, I thought Tom picked up on this too. Jamie Dimon did a CNBC interview, and he really called out some of this talk that's really counterproductive and said, you're getting this wrong. And so I was impressed by Dimon. He seemed to go full MAGA this morning. I'm having trouble picturing the 2024 elections being anything but a catastrophic mess. There's so many ways it can go wrong and so few that it can go okay. It really, I think, comes down to the Democrats somehow finding a candidate who the world could sort of sign off on as maybe having won. And there's no evidence that's happening. Michelle could, in theory, fill that bill, even though she you don't have to like her politics. What we desperately need is what looks like a legitimate victor, and that's what I don't see happening. It's the problem. I am still convinced the markets are so badly overvalued that at some point we're going to start just a wretched march downward. It might have started. A lot of people haven't noticed. In the last 2 years, the markets have basically gone through a big dip and come back up, which means, given what we all probably think about inflation, that's about a 30% downturn in the markets. That has not recovered it. Yeah, in real dollar values. And so I have to keep reminding myself of that as I have to recalibrate what I consider to be fair value and things like that. And CPI corrected, markets are not going to tell you fair value. And then I happen to just notice Tavi Costa's plot that showed the gold equities, the gold equity to gold ratio has dropped sevenfold over just a very short period of time. And so this year I said, look, if you see me talking enthusiastically about gold equity, send me some mail. Boy, it's hard to imagine that's not going to turn back up. And you got to figure it's going to be the equities going up, not the gold going down. So.
What I would say, the only thing I don't disagree with you, David. Markets potentially, I happen to believe that, I think equity markets are going to continue to rise. They may not outpace inflation. They may not outpace inflation. It's the bond markets that are horribly overpriced. And because of that, that's why equity markets we could see a massive bid under equity markets. And we're already beginning to see the bear steepener trade fold in the U.S. yield curve on since the beginning of the year. I regularly post for my patrons. As a matter of fact, I just did so about an hour ago. The latest time series of what the U.S. yield curve looks like, and the last, I updated it to where did we close on New Year's Eve, and then where are we today? And it's very, very clear that go look at the yield curve, do a yield curve series on New Year's Eve and today, and you'll see the bear steepener trade happening. The 5-10 spread, 7-10 spread, the 10-30 spreads are all busting out to the upside. And now the 2-10 spread is on 25 basis points and kind of stable under 20, bouncing between 20 and 25 basis points, as opposed to a negative 40 to 50. So, markets, I just think the bond markets are horrifically overpriced. And I think that's also what Diamond was talking about when he was on CNBC. That was the undercurrent of what he was saying. It's like, look, you all are talking that inflation's been tamed and, Fed's going to cut rates, but I don't think you should be thinking about that at all. I think inflation is everywhere. And I think there are multiple venues, again, that the globalist temper tantrum, you take across multiple, if this is a company, multiple verticals, the geopolitical one, the domestic policy one, the Ukraine one, the Red Sea one, this, that, everything. When you start factoring all those things in, like, inflation is everywhere. And then all that has to really happen is for oil to put in a really strong technical signal above $80 a barrel Brent on like a monthly closing basis, and forget it. We're going, it'll go back 100 in no time flat. And then, retail price of gasoline has to start rising, and then blah, 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 blah. And then it just all starts to go up to,
what stuns me is how,
this morning I just plotted the price of Brent crude in euros, and you can see a basing pattern there, on a weekly close basis. And I'm waiting for that to start rising. And then that's going to tell the ECB is not going to cut rates either. They can't, because the Fed's not going to cut rates.
What stuns me is how few people, how there's so many people who don't understand that when the inverted yield curve steepens back up to normal, that's when the problems start. I don't understand how that is not a headline. It's sort of like the inversion is the coiled spring, and it's waiting to uninvert. And so people now say, oh, great, now the Fed's going to start, cutting rates, which I don't see evidence of that yet. I don't think they are necessarily. And when the Fed starts cutting rates is when the shit is really hitting the fan. That the rate cuts start at the top, not the bottom. And so you can easily make a case based on just those two that we've got a couple of years of problems ahead of us. And my fair value, forget about inflation, my fair value is in the teens for the S&P. So I am the most bearish guy on Twitter. So
I'm not. I don't have I don't do fair value calculations. I'm too much of a trader. Right.
I'm not a trader at all. So you and I are polar opposites on that.
In terms of how I approach the markets, I let the market speak through time series, and I'm not seeing that at this point. What I'm seeing is, and I'm not saying you're wrong, Dave. What I'm saying,
you'll never see it at the top.
No, I just don't know where the top is.
Right, but
my point is, I think we can see Dow 50,000 before we see Dow 15,000 is the point. But I can see both of those things. It's just the order of operations at this point is the issue. And, because markets don't trade on fundamentals. I wish they did. If they did, it would they be so much easier to forecast. They don't. They trade on momentum and sentiment, and they trade on other factors as well.
We're not in disagreement though, because I explicitly excluded inflation adjusted.
Yeah, agreed.
And so yes, the markets could go up nominally, but we'll get crushed. We will get crushed.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
I have to ask both of you, are you currently looking, are you seeing any opportunity in the markets right now? Dave, are you sitting on the sidelines with cash in anticipation of a potential correction should the S&P revalue to what you think it'll be worth? Do you think there's any opportunity in the commodity space right now? You know, gold and silver miners, obviously, a lot of people, you talked about Tavi Costa noting the divergence there between the metal itself and the miners. Do you think there's an opportunity there? Would love to get your thoughts. And Dave, I'll start with you.
I mean, the problem is the miners seem to be widow makers at all times. So there are periods of time where you can point to say, oh, if you own home, whatever style mining, whatever it was back in the 30s, homestake mining, you made a fortune, but most of the time they're crushing people. And so it's a painful thing to be a miner owner. If you put a gun to my head, I'm very liquid. If you put a gun to my head, if you include gold as liquid, right? If you put a gun to my head and said all in, I would have to go to commodities. Absolutely have to go to commodities. And I think the commodities will feel the pain too when the markets start whooshing down some luge run in real terms. And what I just don't think the commodities will fight that downward push. I think you start selling your children at some point, and so I think that's what the markets will do. But I think again, if gun to the head, that's where I'd put my money if I had to get out of sort of safe assets.
From my perspective, yeah, I mean, I'm with Dave on the fact that I am mostly liquid, and I do consider gold and Bitcoin both cash equivalents. And so clearly where we are right now, yes. And I do love the commodity space, simply because it's been a bear market for the last year and a half, right? And if we're talking about inflation coming back, we have to talk about what kind of inflation. Neither Dave nor I are talking about demand pull inflation. So
right.
clearly it's a cost. Right. Clearly, it's a cost push inflationary model that we're talking about. And then, of course, if commodity prices are low, then it's going to be rising commodity prices in nominal terms that are going to start pushing inflation higher, which will then keep rates higher. So at the same time, I guess if you also believe that treasuries less than 6 months of duration are considered cash, well then yeah, I'm also in cash there.
Oh, that's absolutely cash. Yeah, that's absolutely cash.
Okay, I just want to make sure that because that's not, it's a subtle point for a lot of
people.
I
consider 2-year treasury cash.
Oh, I don't. Well, maybe Janet Yellen at the helm, but
if I was exclusively 2-year treasuries, I wouldn't.
Right.
But since I've also got cash and treasuries, they just represent the cash that I'll use 2 years from now.
Right. Okay. So in that respect, there's an opportunity there. I also think that if you really want an opportunity, I believe that this bear steepener trade is happening. So then you go short the long end of the yield curve. And that also means by extension that you go short European assets because they're going to get crushed if the long end of the yield curve normalizes. And I think at the same time that knowing that the Bank of Japan is in the process of changing off of 30 years worth of QE and negative interest rates because of commodity cost push inflation eating away, then the Nikkei is going to 50 grand as well. And you should be I think the Nikkei is going to kill it. And I've been pounding this point home for close to a year now. And I haven't been wrong. And as a matter of fact, to start 2024, the only thing that's outperformed the Nikkei so far has been the NASDAQ. So
and that sucker's gonna do a swan dive.
well, that I buy. See, the Nasdaq I buy. I'm very much with Mark Armstrong about this. That when I say the markets are going to do well, I mean the Dow
Right.
on
The
an international
S&P
capital
maybe.
flow.
Right, maybe.
I do not believe that as far as the Nasdaq, and I do not, and then I have a different position on the S&P 500. I could think the Dow was a laggard last year. It was a laggard versus the Nasdaq. It was a laggard versus even the German DAX and the Eurostoxx 50. And I think it was the laggard of the four major U.S. indices: the Nasdaq, the Wilshire, and the S&P. If anybody want to correct me on that one, that's fine. But I think the Dow is ultimately the laggard. The only thing it beat was emerging markets, which are also going to get beaten with an ugly stick this year. So if Dow was the laggard last year, and I can make that argument based on, on the lack of capital flight out of Europe by holding everything while Lagarde playing yield curve control and holding everything in place. Well, if that ends in 2024, because of what we saw in 2023, which is the de-euroization of global trade, right? Then where the percentage of global trade outside the Eurozone collapsed from over 3% to under 13%. So the euro has been removed from global trade. And so now what's left, but other than monetization on the part of the ECB and intervention. So when you factor all that together, I think you solve all of those differential equations and you come down to the Dow Jones could outperform, everybody's expectations on a if there's a global, I'm trying to get clean. If there's a global, meltdown, well, or even a mild meltdown, even if we just move into a stagflationary environment, like the early parts of the 1970s.
We're there now.
Right. Okay.
We're in it now.
So let's accelerate that another year down the line. Well, then the Dow clearly is going to continue to grind higher while everything else kind of,
Salesforce.com accepted.
What's that?
Salesforce.com accepted.
Mm-hmm. Fair enough. Yes, Salesforce.com. How that is in the Dow, I do not know. But yeah, there you go.
So I would
the
like
companies
to.
They bypassed
Go
to
ahead.
put it in are amazing, right? So they jumped over some obvious Dow components and
Right.
put Salesforce.com in there. I go, what were they thinking? I might as well put in, some micro cap or something.
Well, Dave, like why did they change the Brent crude contract to be 25% WTI? Well, then clearly in order to undermine the validity of the Brent crude contract to cap oil prices. Like, why would you put Salesforce.com in the Dow? To undermine the Dow as a measure of international capital flow into the U.S. markets, into U.S. blue chips. Or because somebody on the sales or the other side, because somebody on Salesforce.com has got an in Congress. Like, I don't get it.
Why do you think emerging markets are going to get crushed? Since if you listen to guys like Grantham and stuff, that's where they're putting all their emotional capital.
I wouldn't do that until easily 2025 or 2026. The dollar has got to finish blowing off its top.
Okay.
Rates have got to go much higher in the U.S.
Which I bet they will.
People are arguing that we're going to get 5 to 7 rate cuts in the United States in 2024. And I'm like, whatever you're smoking, whatever mushrooms you're eating, I would like some, even though I don't either smoke any of that stuff or
in theory,
or do mushrooms. But I'm not into the Janet Yellen thing of doing magic mushrooms. But hey, man, that seems like good stuff. Maybe I should buy some. I should try some of that stuff. I just don't buy it.
Okay, so Tom, one of the predictions in your blog for 2024 was soft secession in the U.S. and Canada. Speaking of Davos globalist,
what is that? Wait, was that a
tantrums.
typo? Was that a typo? Soft secession? Was that recession or secession?
Secession.
No, it was not. That was not a typo.
Yeah, and you had brought up Alberta and Saskatchewan openly defying the federal government in Canada when it came to the carbon tax, and 20 U.S. states introducing some form of sound money act. So could you break that down for us? What are you seeing there with the trend of these soft secessions?
It's the fact it's federalism in the U.S. rearing its ugly head from a globalist or from a Davosian perspective. I'm not talking about like states are going to secede. I'm saying not in 2024. We'll see what happens, before the end of this decade. What I'm saying is that we're seeing a lot of, as things get intolerable, as the Biden administration continues to try and go full authoritarian, as Dave pointed out about the opening statements over at Davos, right? They're going full, like, full authoritarian retard, right? So if that's the case, you're going to see the natural pushback where we see the Surgeon General of Florida outlawing the vaccines and calling them harmful. Okay. We're going to see states turning around and going, you know what? We don't want our tax money back. That's okay. We don't want the money back that comes with the strings that came with it. We don't want it back. Like, we'll just build the roads ourselves. Like,
it's also going to accelerate
this is how the federal government gets around federalism, by taking the money and then doling it back with strings and having taken, their vig off the top, right? Well, hey, how about no? How about we don't want the money back? We're going to do this anyway.
They're going to accelerate
this. To see Danielle Smith and Scott Moe say no to the carbon taxes is how you kill off Justin Trudeau and the unfortunately named Chrystia Freeland.
Oh God, I hate her. What's going to accelerate this, curious enough, I think, is actually, as the gag has been taken off the COVID story, people are going to get increasingly angry at how duped they were by the federalism, as you would say, right? And I just posted an article about the autistic rats, and when they said pregnant women should get vaccinated, without a shred of support for that statement. Scientifically, It was a scientifically illiterate suggestion. In fact, I call it psychotic and sociopathic. Now we're finding out that rat studies are showing that pregnant mice are putting out autistic offspring. And my thought was actually that what we've done is sterilized a generation of young women. I thought it would show up as an infertility problem, which might also be true, because you're not too far. If you're starting to invade the womb, you're starting to do some damage in there. But I think people are going to it's really going to start to click. Drew Pinsky, Dr. Drew, did a poll and said, do you know someone in your immediate family, including you, which I infer that statement is not, your third cousin. So I'll call the immediate family on average about 5 people. Who's been vaccine injured, and a pretty big sample size came up with 26% yes, which means it's on sort of the vicinity of 5% vaccine injury rate. And so as this becomes no longer verboten to talk about, you don't get kicked off social media, and scientists are starting to now publish papers, we are going to discover that mass murder little piece of crap Fauci sent us off a cliff. Now, I'm going to I got to put this in there. I'm going to defend Trump, because a lot of people come back, well, he totally blew the vaccine. No, he didn't. He delegated. He ended up with a guy who had been deified, got it dead wrong, but he couldn't get rid of him. There's no way Trump could have gotten rid of Fauci without turning it into an unbelievable disaster. And so signing up Bolton was a disaster. Not getting rid of Fauci was imperative for him. He could not get rid of Fauci.
Yes.
And as a consequence, he ended up with Dr. Mengele running the operation. So as that starts to sink in and people start to say, by the way, this climate change story is pretty goddamn stupid too. And they're going to talking about taxing this and doing this and tell me I can't eat steak and I got to eat bugs and this crap. And they're going to go, no, I've had enough. And therefore you're going to have states' rights kick in.
Oh yeah, no, absolutely.
And we're seeing something.
You're seeing exactly what I'm seeing, Dave. And I think it's actually more organized than we want to believe. The reason Ron DeSantis came in second in Iowa was because of how he handled COVID.
Right.
Okay. It's not the $150 million that he took from the Bush clan or whatever, whatever Sundance conservative treehouse or Robert Barnes wants to talk about. That's not why he came in second. But
DeSantis is a lousy candidate.
He is an absolutely lousy candidate. That's not our
Nikki Haley, if you gave her a new disk operating system, she'd be a great candidate if she wasn't such an authoritarian neocon.
And she always has been.
Right. So what you need to do is you need to take Nikki Haley's body and delivery give her some Vivek rolled in there, give her some Trump rolled in there, and then you got an unbelievable candidate. But
Right.
she looks more dangerous than Hillary to me.
She
So
is.
I would be. We don't really know, but I think so. And now.
No, Dave. I know she's more dangerous, and you want to know why? Because she's
do.
indistinguishable as a globalist puppet from anything
totally.
the Democrats would give us, and therefore anything that they try to push through will go through. She'll get 20 votes out of the Senate, out of the GOP senators, and loyalty alone because she has the R after her.
It would be like Liz Cheney getting elected.
Exactly. It's even worse. So Nikki Haley is absolutely the worst possible intersection of belligerence and stupidity.
Trojan horse.
Absolutely, in every way. Like those memes of her with, of morphing her with Hillary, perfect.
Right.
But as far as I'm concerned, she needs to go back there. The best thing I saw after the Iowa results was one of my regular patrons said to me, I posted up the results, and he said, by the way, there was an opening for a Waffle House waitress over at the Waffle House outside of Charles. I'm like, yep, exactly.
So here's the question I want both of you to answer. You have to put $100,000 into the pot, and you have to pick president as of February 2024, which might be too soon. It might be March or April or May before we know. But who's president?
I don't have
Trump. If I had to say if I had to again to draw on your statement of gun to my head, I would say Trump.
And who's his running mate?
That I don't know.
Vivek.
Maybe Vivek.
Vivek wants it bad. Vivek
I know.
Vivek wants it bad. Vivek should. I don't know. Vivek should have it. What I would say is the following.
I'd like to see Kennedy get it.
I can chart a path for Trump to get inaugurated. And again, I'm going to go back to what Jamie Dimon said this morning,
which was brilliant.
As your signpost.
Brilliant.
Roger Stone, I think, let the story out the other day. The right choice is Tulsi Gabbard.
Oh, I would love Tulsi Gabbard.
The right choice is on every box tick. It's Tulsi Gabbard.
Because she brings left-wingedness to it. She brings military.
She brings military. She brings a calm. She brings a strong woman who will stand up to Trump.
MILF component in there, everything. She brings everything.
Yeah, all of it. And the fact that she's a former Democrat,
right,
that has moved on, has moved on the one issue that was verboten, the guns. She's moved on that issue. It may have been cynical, but she's been angling this for 2 years now. You could see
that she was putting the move into play. I remember when I first started, I was like, wait a minute, Nikki's talking right wing now. And it took a number of months. Not Nikki, Tulsi
Gabbard.
I've been telling people for at least 10 years to watch Tulsi Gabbard. No one knew who the hell she was. I said, watch this chick from Hawaii. Watch this chick from Hawaii. It was so obvious to me that she had places to go. The other thing I'd like to point out to the listeners is that there are a vast number of people who have WEF contacts. That doesn't mean they're bad people. Right? Putin's WEF. They say, therefore, Putin's with the globalists. I don't think so.
No.
And Gabbard, so if you or anyone of any importance, you get invited to be in the club. And it doesn't mean you became a card-carrying club member. It means you got invited to be in the club. And if you're young and ambitious, you're not going to say, oh, screw you. I'm not going to join you clowns at Davos. Of course you're going to go.
Here's the thing. When she first, she's talked about this explicitly. So anybody who's worried about Tulsi Gabbard as young global leader from the WEF, there's easily half a dozen interviews out there with her and/or podcasts she's done personally, disavowing and explaining the entire process. She was, by virtue of the fact that she was put on a particular committee, made her a member of the Council on Foreign Relations. Okay, by virtue of she was invited. But the council has like 20,000 people too. So the council's not some Illuminati of 300. It's an Illuminati of 20,000. Right. So, and then, she was invited to a meeting for the WWF. She was sounded out. She's like, And I looked around and I'm like, yeah, I'm not interested in this. And then they found out she wasn't a globalist, but she ticked all the boxes for the globalists. So they had to sound her out. Hey, young, ambitious, woman of color, military background, blah. You could tick all the boxes. Is she not the perfect candidate for them? So they, when she failed, they shifted to Kamala Harris because Gabbard's got integrity, because Gabbard's military. And so
and she has a brain too.
And she has a brain,
I posted today, I saw Kala on The View, and I realized she fits there perfectly.
Mm-hmm.
She could go straight to The View after being VP, and she would fit right into that group. Just mindless, middle-aged,
cackling
whatever.
midwits.
Okay,
yeah.
Let's shift to the EU now. No, I love this. My job's the best when my guests can just kind of conduct their own interview, and both you guys are always fascinating to listen to. But I want to highlight an article that Reuters published recently, highlighting the fact that EU liberals believe a far-right rise could make Europe ungovernable. Now, the term far right is just getting thrown around out there. Anything that doesn't go along with the agenda is labeled far right, Malay's far right, the Viktor Orban's for whatever doesn't go along with what they want.
If you're right of Karl Marx, you are now a Nazi.
Yes, exactly. Right. So what does the future really hold for the EU in your views? Tom, I believe I had you on my show last time. We talked about the fact that you thought the EU was potentially headed to be disassembled eventually. Lay that scenario out for us, and then Dave, I'd like to get your thoughts as well.
Sure. So I love the fact that they're now using my term, ungovernable, which we seeded into the marketplace about a year and a half ago, or no, 2 years ago. It took a while. I find it funny that now you search hashtag ungovernable on Twitter and you get something other than my Twitter feed. By the way, I'm just happy that it's there. I don't give a damn that I'm glad because everybody's now using it as a thing, and now they're trying to appropriate that term and use it as a hammer, right? So now we got to watch how this morphs and changes. That's fine. We'll stay one step ahead of them because that's what we're supposed to do. We're supposed to be a reality creation business, like they think they are. The European Union is in serious trouble from a structural perspective, and that's why they're pushing so hard for the integration. They're desperately worried about Viktor Orban's tenure as the president of the European Council starting in July. That's why they're pushing everything to get done as early as possible with Ukraine.
How do you get that position if they're so worried?
It's a rotating presidency. It's a rotating presidency. Every country gets 6 months at the helm.
And they just Hungary's happen to have him in the queue. Got it.
Yeah, and Hungary's.
He's phenomenal. He's phenomenal. I'd take him as our president. I'd just import him and do the birth certificate cover-up thing.
Yeah. And then the other problem, of course, is that Charles Michel, current EU Council president, is now going to stand to become an MEP, stand for European parliamentary elections. So that would then default that Orban basically runs foreign policy for the European Union for nearly a year, and they're freaking out about this. So they're trying to figure out what they can do about that. And the question is, what does that mean? Does it mean that we got rats leaving a sinking ship, or is it that Michel was never really a globalist? And it means a lot of things. But the problem for the European Union is they've got political integration, what they don't have is integrated taxing authority and fiscal integration. So they need to collapse the member central banks, and they need to give the European Commission direct taxing authority. And the camel's nose under was the post-COVID spending and the safe bonds. Yeah, no, secure bonds, whatever they sure bonds. That's it. That they issued, and they're still having problems actually selling them to people. But they made headlines a couple of years ago selling a couple of billions of these things. So they're in trouble. They can't sell a couple $100 billion worth of these bonds, and half $500 billion worth of these bonds. How are they going to turn that into central taxing authority over the entirety of Europe? you can see it in what's happening with Donald Tusk's turn towards authoritarian suppression of his opposition in Poland. You can see what they're doing in Poland. It's very clear. Poland is a mess, and it would take 20 minutes for me to actually even begin to unravel for the listeners in any nuanced way. But just understand that Tusk was put in position and is one of the few examples of them rigging an election and winning in the last 4 years. That's the only one that they've done in Europe, well, where they created an anti-coalition to the sitting government and then got it through. They tried it with Orban and failed. They tried it with Vucic and Serbia and failed. They tried it in a couple other places and failed. But in Poland, it worked. And you can question whether or not it's a valid election or not, and you should, but it doesn't matter. He's there. He's doing the thing. So when you start to think of, in terms of how are they going to get any further along in this integration if they run up against the fiscal wall and they run up against the debt wall, which they have. Like, the ECB wants to cut rates. They need to cut rates. And they can't, because all won't let them. So I think we're in a game of inflation chicken. And, whoever cuts rates first loses.
Wait a minute. So they have to now choke the inflation chicken?
I said I'm not going to the Tommy Kerrigan level on Jesse's podcast. That's unfair.
Okay.
So we'll stay out of Tommy Kerrigan.
That's not.
I know Tommy you and Kerrigan I do that level. Show, and we can, and anything Kerrigan goes on that friggin' thing.
Tommy Kerrigan goes deeper than that.
But seriously, it's a game. No, it's a game of inflation chicken. Like, it's a game of if you make that move first, you're going to lose. So how do I maneuver you into making that first? That in gaming, in board gaming, we call it action chicken. When it's your turn to take an action, if you go there, you're going to lose. You're going to lose because I'm going to be able to then score more points after you go there. And if I go there first, then go there first, and I get to score those points. It's a weird moment, and I think that's where we are with inflation, with cutting rates, and that's why you're seeing so many people argue so strenuously, even though the Fed has not really said anything about cutting rates, other than the dot plot, a bunch of doves that were placed on the board in order to do exactly what they did. So again, reality.
Was it you who said? Someone said that if you listen to what Powell said about cutting rates, he was sort of talking third person as though it was not him.
Yes, I made that point. Joseph Wong also made that point. That point. And that Powell didn't pivot, the dot plot pivoted. And
he was describing the FOMC's pivot, but he is still the FOMC decision maker is the key.
When it comes to rates, remember, Joseph Wong's right. It's very clear that Powell's in charge of rates and the individual FOMC members are in charge of their dots.
Right.
Okay. So with that in mind, and then you look at the futures curve. You look at the SOFR futures curve and the Fed funds futures curve. And you're like, how is anybody thinking seven rate cuts this year? What's wrong with you people? And clearly, there's something being run here, and it really does call into question the validity of all of our capital markets if we can move bond markets this far. It's the deepest, most liquid markets in the world, and we can move them against the trend that far. Or the markets aren't wrong. And yeah, Dave's right, and the whole thing's going to collapse in 6 months. But
Dave doesn't believe in 6 months. Dave believes multi-decade.
Oh yeah, okay, fair enough.
I think it will rot like a corpse.
Yeah, but so do I. I'm no.
I don't think quick drops do anything because the dip buyers come in too fast. You've really got to the way you really correct a market that's way overvalued is a death by 1,000 cuts. You do not correct it by lopping its head off.
No. Nope. You don't. You grind out the bear market from 1966 to 1983.
You demoralize the investors.
Yes.
Well, Dave,
So
let's end on this because in your recent 2023 year in review article, you discussed precious metals and you touched on platinum specifically, where you said, despite a multi-year horrific performance, I think platinum may be the story to watch in the coming years. The physical metal has been dead money for years, hovering in a narrow band in the 900s. Even the gold bugs never talk about platinum. And you added, the platinum miners are priced like escorts in the San Francisco's Tenderloin district. So talk to us about that. Break down the opportunity you're seeing in platinum.
Well, it's not a very deep analysis. The miners have, I hate to use PEs, but that's the easiest one to get. They have PEs of like 5 or 6. They are admittedly in South Africa, where who knows what's going to happen. Their balance sheets are strong, and all of this without platinum providing any assistance whatsoever. And so I have a friend, Mitch Fierstein. He's a platinum bull, and he thinks you should go with the platinum, not the miners. I'm inclined to go with the miners because the fact that they actually look really well priced. I'm not going longer now because I'm still waiting for some cue that says I'm right. I'm not. I don't want to buy 10 more years of dead money. But the other thing is, I think they're there because people think that catalytic converters are going to go the way of the dodo bird, and have ignored the fact that the actual engine that might actually be pretty good would be a hydrogen fuel cell, which uses platinum as the key component. And so I think the idea that platinum is no longer of industrial value is probably the flawed assumption. That's my guess. It also could just pick up a meme stock component, right? These commodities tend to just get a fire under their butts and they just go, right? They just go bananas. So if platinum ever went bananas, those platinum companies would have a PE ratio of 0.5. You'd be paying off the entire cost of the stock in 6 months. So that's the bull's case for platinum. It's unloved. It's profoundly unloved. And I picked up the platinum theme off a couple of YouTube videos by a guy who analyzed the equities, and he had like 40 clicks. I mean, it literally like 40 views. And he went through the balance sheet and stuff, and he analyzed them and said, "Here's why the platinum miners look really good to me." And I go, "You're right." I spent a couple days this summer with a guy who's I believe to be the largest private holder of SPSW, for example, and we chatted for hours, and he explained to me the dynamics of the company. I'm not good at stock picking, but every once in a while I try to pretend like maybe I'll get lucky. I made 7-fold at WorldCom. That's pretty good timing. So in any event, that's it.
Awesome.
I don't think I think it's an interesting thesis, and I'll be honest with you, I don't believe the EV thing at all.
Right.
And I just don't, and I don't believe, and I don't believe in hydrogen either. I'm sorry, I'm with the engineers. I don't believe in pushing dead whales up a beach. I just don't, And so at the end of the day, until we're moving to something that actually needs and there's at the end of the day, look, this is physics. There's nothing better than an 80-20 platinum ruthenium catalyst for hydrogen generation, period, under any circumstance. If you think there's a future for hydrogen as an industrial commodity, then I'm sorry, go and look at the metal hydride volcano plot from any first semester graduate level electrochemistry textbook, and you'll see exactly what I'm talking about. And I spent 5 years doing this shit. I'm telling you, there ain't nothing to replace platinum ruthenium, and that's it. And it has a singular use. It doesn't have much else, and that's it. And then the other thing is, if a metal like platinum is so unloved, it'll wind up becoming a precious metal. People will start buying platinum jewelry because it'll be so cheap that the marketing costs. Like how many people have titanium wedding rings now, right? Because they couldn't afford gold, they couldn't afford silver or whatever. It's one of those things. Like at a certain point, as Dave says, everything, eventually everything comes around. The cure for low commodity prices is low commodity prices. The problem with platinum is that it has an incredibly strong recycling element to it. That,
right,
every gram of it is recycled and resold back into the market. I did, a full sector analysis on it about 10 years ago. and I just couldn't find a good case for it from a supply and demand perspective. So,
but I think the above ground supply is getting depleted steadily, though. I think
I haven't looked at it recently, so I'm not.
Well,
I'll take that statement with a grain of salt, right?
There's something like 4 platinum miners in the world at this point, and
Right.
it's not a byproduct of copper mining or something like that. And so
Right. You have to
you
go and get platinum.
You have to go find it.
It's the same argument that people made about silver for a long, long time too, 20 years ago, that there are no pure silver miners left in the world, and the ones that were all leveraged to the hilt. Their balance sheets were a mess and blah 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 blah. Think Hecla and Coeur d'Alene, 20 years ago, right? So I don't know, but now today, silver, silver is an industrial metal that needs far higher prices. The silver miners are getting killed. They can't make any money at $22 an ounce silver, and $80 Brent. How are they supposed to make any money? I don't get it. So at some point, these things will break your heart and break your heart and break your heart until they don't. And then when they do, then you become the Grinch, and you go from a heart this big to a heart that big, and you go, well, yay! I won the lottery, and that's that.
Well, gentlemen, it's been a real incredible conversation. Before I do let both of you go, where can people find you online? Where's the best place to go? Dave, I'll start with you.
You can reach me at David B. Collum on Twitter. My pinned tweet is my once-a-year blog. How to market that way, Dave. One blog a year. That's a great marketing technique. And I do try to answer emails, but don't write long ones. Just because I write hundreds and hundreds of pages doesn't mean I can read hundreds and hundreds of pages. Yeah. So that's it.
Great. Tom?
Similarly, you can find me on Twitter, usually replying to Dave at TFL1728. You can follow me at my blog at tomluongo.me, where I do write once a year. And of course, that's where the podcast shows up and everything else. And of course, it's the Patreon at Patreon/GoldGoatsAndGuns. We do a lot of stuff directly for the patrons on a weekly basis, plus as you mentioned, the monthly investment newsletter where the portfolio picks are.
Excellent. Well, I'll put links to all of that in the description below. Gentlemen, it's been great having you both on. You did not disappoint, and very much appreciate you coming on the VRIC channel.
Thank you for the invite,
Thank
Jesse.
you. Thanks for the invite. Yeah.